Earnings season kicks off next week. It's never too early to get prepared. We got banks and we got one key tech name. Mr. Rick Ducat, the chart master, taking a look at the technical setups for us. Taiwan Semi, JPMorgan, Citigroup, the ones you've targeted here, Rick. Obviously, the banks kind of traditionally begin our earnings season, but with all the big tech focus, I think, especially the last couple of weeks, some news around Taiwan Semi. Let's start there because the stock just put in a fresh high.
Definitely important, an important sector to be discussing as well here. And the chart kind of presents us with a situation here that many traders try to look for. You can see that we had some, rallies and declines throughout the year here. Notably, we fell all the way down to our purple 250 two-day EMA on August 5th. Then we started to make our way back to the upside here, but we encountered a notable ceiling. You can see price topped out at that green line just below 206, multiple times here. Kind of gave us like a mini cup and handle type shape here. You can see we gradually bottomed out and then made our way back up to the resistance area and then, broke out. Then we are forming the handle type shape and we are pulling back to the support. A common situation is old resistance becomes new support and vice versa. So now we're at kind of an inflection point. Are we going to continue and bounce and keep this upward move after our bearish engulfing candle and subsequent further decline here? Or is this a failed breakout that's not meant to be here? Only time will tell at this point.
The cup and handle, generally more a bullish thing because of the way the old resistance becomes new support in the handle?
Well, I mean, and I'm just kind of generally speaking about the shape here. Yeah. Cup and handle would probably be a little bit different over a longer term here. What I was trying to describe is just the gradual kind of bottoming out and then resurgence here and the breakout above resistance and eventual retest here. A common situation that develops. RSI not really cooperating the way you might expect, though, kind of back within the boundaries of that red trend line, sloping downward across most of the year, but still above the 50 midline. So when we overlay volume profile and our standard deviation channels, we can see that if we do continue our rally as the bears would hope and press onward here, well, the +1 standard deviation channel at this time comes in at about 234. We can see that the point that we are at today, as of the close of the previous session, has even greater weight now. It's the yearly linear regression line, our line of best fit, our idea of fair value. So 205, 206, if we were to slip below that point, it would be noteworthy. Volume nodes here and here near about 202 and 190 or so. Those could be significant further areas to watch to the downside.
It's a little bit of a false breakout for Taiwan Semi, but one that could be just settling back in to a high volume range in the low 200s, possibly new support around 205. I think it's a pretty fun one here for a technical setup into earnings because now you've got kind of a center point for both bulls and bears to think about right there at that roughly 205-ish. All right, now the banks are going to look quite a bit different. Generally some softness, but we'll get to Citi in a sec. JPMorgan pulled back from the highs late last year, but the long-term trend, does it still look solid?
Well, this is a behemoth. This is a financial giant here. It's pretty hard to think of a long-term case against these big financial institutions. In the short term, though, maybe a bit of consolidation, not really an amazing move over the past few months here. We had another notable ceiling. We topped out around the same level as the previous high, near about 225, repeatedly at that light green line. We had our gap up, gave back some of the gains, never went back to retest that old level near 225. Instead, our more recent low point was around 229.53. Since then, we've bounced a bit, retaken our orange 63-day and yellow 21-day exponential moving averages. Short-term white trend line here is still in play. RSI trended downward here, kind of triangular shape right now, though, suggesting a bit of indecision, a bit of trendlessness as we head into earnings, which is actually a pretty common situation. Momentum often becomes listless when there's a known event risk situation and you're kind of getting right to that point.
That was kind of a bearish divergence a little bit in late last year for JPMorgan, right? Because we did put in that high, the RSI was decreasing, so maybe that was a little bit of a heads up that some of that soft patch was coming.
Yeah, that's a good point. So here to here, higher close in price. Here to here, lower RSI, bearish divergence here. It did indeed play out to the downside like you're suggesting. Certainly not a crystal ball that tells you when something is going to happen. But when you have a short-term divergence, when something's making new highs, it's not what you want exactly. That's not like the best setup as you try to make sense of a trading plan there. So now we can see we're in the thick of a serious volume node. This is a big, heavy trading area near this point near about 243 or so. The highs, that's the obvious point to watch, 254.31. Then our +1 standard deviation channel near 262. If we were to retreat to the downside, the same levels I mentioned earlier are the important ones here. This low, 229, so around 230. And then this volume node lines up with our old highs, roughly around 225. So some key areas to consider.
All right, nice. JPMorgan trying to recover after a bit of a fade, holding the general uptrend. Another one that's kind of come to that middle point of the regression line for the overall trend. A big volume node too, so another fun one for earnings. I think we've kind of got your baseline to know where the activity is happening around 240, but some pretty clear kind of target areas if you're bullish or bearish. To pick, I think, thinking 230 if you're bearish, thinking 255, back to the highs if you're bullish. Citigroup actually has had some pretty recent strength and the little pop out to a new high.
For sure, yeah. And, you know, we're not trying to predict things. We're identifying key important levels here to help make a trading plan. And you're right, we are seeing a bit of an intraday move beyond those old highs. Not really sticking, though. We did have a higher close. It was on a red candle. And then during our previous session, we retreated a bit back below those old highs here. Nevertheless, upside progress is noteworthy. Breakouts, even if they do fail, are worth noting. The more times a line of support or resistance is tested, the weaker it becomes, the more probable it is that the price will break through. So we can see now, as we head into earnings once again here, we have a white trend line that was broken, but we're still within the broader confines of this blue upward sloping channel. We can see that our white trend line is pretty close to that yellow 21-day EMA, so 70, 71 could be supportive. We've also got this green line, this old high point here, matched up with the low point here, so around 67.50 is another noteworthy area to consider. And even before that, too, 68.50 or so, 63-day EMA and our blue trend line up together. So some pretty clear downside areas to consider. RSI, once again, a triangular shape. Slowing down a little bit as we head into earnings here, but above the 50 midline, making some decent progress after our gap up. Now when we look at volume and standard deviation channels, we can see that this was the key area right here. Around 69 or so was the heavy trading point, and the only other real heavy node that we can see anywhere near where we are now, around 62, which lines up with our purple 252-day EMA. +1 standard deviation channel is about where we topped out during the session before last, around 74.30. +2 channel, 79.38, another place to consider to the upside.
Seems like good support generally for Citi below where it's trading. A lot of volume, a lot of moving averages, a lot of lines connecting. A pretty good looking chart actually, and one that oftentimes on earnings can deliver a surprise, stock specific growth or lack thereof, and their recovery, I think, generally, as opposed to kind of the more macro themes that hit some of the other banks. So maybe if Citi surprises again, we'll get back towards that $75. Nice charts. Good luck for earnings kicking off next week. Banks important, but big tech, major player with Taiwan Semi as well. Thanks, Rick.